Hey there, it's already July 2025. We're through the first half of the year here in the city of Cape Coral, Florida, and that means it's time for the monthly Cape Coral real estate market update video. I do one of these every single month, and we're really going to give you some facts and the figures of the Cape Coral real estate market. I'll show you what's going on in the broader context of the overall market, and then we're really going to break things down into categories. So we're going to talk about off-water single-family homes. We're going to talk about, of course, Gulf access homes. We'll talk about condos and townhomes as well as vacant lots, and then I'm going to wrap everything up by giving you some advice if maybe you're a buyer in this Cape Coral real estate market, or some advice if you're maybe a seller in a little bit tougher Cape Coral real estate market. And I'm also going to share my thoughts on the scuttlebutt of the day. Of course, in the news, the Wall Street Journal declares Cape Coral as the worst housing market in America. I'm going to share my thoughts on that piece with you and give you some of the broader context of what I think they're missing in that piece. So I can't wait to tell you about that. But also, if you're not familiar with this channel, I do one of these videos every single month. This is a longer form video, so we're really going to go in depth in the Cape Coral real estate market, and there's some chapters down below if you'd like to skip around, because again, these videos tend to get over an hour. I'm going to be giving you a lot of information in this video, but these are just in addition to the weekly videos that I put out for fun on this channel, where I just give you some really great information. Sometimes we're looking at some really fun real estate here in the city of Cape Coral or in Southwest Florida in general. And sometimes it's just really good, useful information. We're talking about insurance. We're talking about some of the new things that are coming to the city, or, things like that. So I think if you're interested in this area of Florida, or maybe you're considering a move to Cape Coral, or maybe you're going to be moving to Fort Myers or moving to Punta Gorda or something like that, I'm going to encourage you to reach up and hit the subscribe button so you can be around for these videos every single month, because again, I think you'll get a lot of great information from this channel, and try to give you a lot of good information, provide some value for you, because I figure if I can do that, then odds are you will remember me when the time does come and you do need a realtor if you're buying or selling something here anywhere in Southwest Florida. And of course, my contact information is right there on the screen, but it's also down in the description of this video. You can call, text, or email me anytime. I would love to hear from you. Love to hear about your real estate goals and tell you a little bit about how myself and my team can help you out with those. So with all that out of the way, let's go ahead and jump into this report. As we do every single month, I always start out by just sharing the highest and the lowest sales of the month. So again, we're going to be talking about last month, so June of 2025. So let's dive in. We'll start off with the lowest sales of the month in the entire city of Cape Coral. Okay, so these are going to be the lowest sales of the month of June 2025 for the entire city of Cape Coral. I'm going to give you a few different categories. We'll look at the lowest condo sale, we'll look at the lowest single-family home sale, and then we're also going to look at the lowest Gulf access home sale. I know a lot of the folks that watch this channel are interested in Gulf access properties. Certainly, Cape Coral has more Gulf access real estate than virtually anywhere else in the state of Florida, so I know a lot of folks are interested in that type of real estate, so I'm going to give you the lowest and the highest sales for Gulf access homes as well. But let's start off with the lowest condo sale, and that's this one right here, 4227 Palm Tree Boulevard, unit number 3. This condo, it's just a little 1-bedroom, 1-bath condo in Country Club Estates Condominium Association. That's over in the southeast section of Cape Coral, and actually it's right by where the old country club was. And actually that piece of property was just purchased by the city. They're going to turn that into a nice green space, maybe a park or something like that. So it's a great location over there in the southeast, but this was a little 1-bedroom, 1-bath, just 848 square feet inside. And this thing was listed for almost 4 months, actually, at $119,900 is where it was listed at, $120,000. It finally sold towards the end of June for $105,000. And $105,000 was the lowest condo sale that we saw this past month. There actually was one transfer that was at $90,000, but it was fire damaged. I don't really want to consider that. This one happened to look fairly decent inside, so $105,000 seemed to be a pretty darn good deal, even though it was a 1-bedroom, 1-bath, built in 1968. And the condo fees here were just $465 a month, and unfortunately that's pretty cheap as far as condo association fees go. These days. $465 is not terribly bad, but congratulations to the buyers and the sellers. This looks like a pretty decent condo. It's just a smaller one over there in the southeast, and $105,000 was the lowest condo sale of the month of June for the entire city of Cape Coral. All right, let's jump over to single-family homes. And the lowest single-family home that sold in the entire city of Cape Coral last month was this one over in the southwest section of Cape Coral. This was was at 930 Southwest 34th Street. That's just on the corner of Gleason and Skyline Boulevard, if you know where that's at. But this home was also listed for almost 4 months. 4 months. It was actually a HUD home, so this is a foreclosure, a government-owned foreclosure, and it looked like it was pretty maybe beat up a little bit inside, but certainly it was priced pretty low. It was listed at $238,000, but it sold for $180,000. So I'm certain that something came up in those inspections. Because typically on these foreclosures, these HUD homes, you really don't see that big of a discount coming off that list price. Usually you have to wait for them to walk it down because they probably have appraisals on file that show that property is maybe worth a little bit more than where it closed at. So it's difficult to get discounts like that, but nevertheless, $180,000 was the cheapest single-family home that sold in the entire month of June. And it was just under 1,200 square feet, 3 bedrooms, 2 baths, built in 1992. But man, you can't ask for a better location for that price over there in the Southwest on Central Water and Sewer, and just a really solid location. So that's a really good buy. I'm sure there was some things wrong with it that they needed to fix, but still at $180,000, anytime you're getting a single-family home these days under $200,000 is a pretty good day if you're a buyer for this type of property. They actually started out at $280,000 and had to walk it down to $238,000 before they finally did close this at $180,000. But congrats to the buyers on that property. $180,000 was the lowest single-family home sale of the month of June for the entire city of Cape Coral. And let's do the fun one, the lowest Gulf access home sale of the entire month of June. And this time we're over in the Southeast again, 3521 Southeast 19th Avenue. This was just a little 2-bedroom, 2-bath, 1,457 square feet, built in 1972. This was actually a direct Gulf access, so there was no bridges to get out to go out to open water by boat from this property. And it's over in the Palaco Grande neighborhood, if you know where that's at. So a really top-notch area over there in the Southeast Cape. But this one was listed for $379,000. It was on the market for less than 2 months, and ended up selling at $350,000. And $350,000 is a dynamite price for any direct Gulf access home these days. And you know, this one, it kind of shows what the market's been doing. This one started out listed at $465,000. And it had to go through 4 reductions before they got it to $379,000, where it finally sold. It sold within a week once they got it down to that $379,000. So these homes are selling. You just got to get them priced right. Once you get them priced right, they're moving fairly quickly. But it's taken these sellers a little bit longer to figure out where they need to be priced at. Certainly $465,000 was way too high for this property. But it sold for over $100,000 less than that. But it had a nice interior, nice overall property. It is in the flood zone out there, which is part of the problem. But $350,000 is just top-notch price for these direct Gulf access homes, even the ones like this one without a pool. So definitely congratulations to the buyers on picking up that great deal. $350,000 was the cheapest Gulf access home that sold for the entire month of June 2025. So with that being out of the way, let's go ahead and jump over to the fun ones and look at the highest sales of the month of June for the entire city of Cape Coral. Okay, now that the sun's back out, let's look at the highest sales of the month of June 2025 for the entire city of Cape Coral. We'll keep similar categories. We'll start out with the highest condo sale of the month. The condos, typically the activity goes down quite a bit as we get into these summer months, so it's no surprise that we didn't have too many condo sales, and we're going to get into that. But the highest condo sale that we saw last month in the entire city was this one over here in Tarpon Landings at the Tarpon Point Marina. 6061 Silver King Boulevard, Unit 201. That's in one of the high rises there. These are typically, whenever these sell, they're usually amongst the top sales of the month for these condos. They're really kind of in a category of their own out there. These are huge units. This one was 3,048 square feet, which is an enormous property to be for a condo like this. But it was a 3-bedroom plus a den, 4 bathrooms, built in 2007 is when they built those towers out there. And this one was listed at $1,050,000, $1.05 million. It was on the market for a little over a month, so it sold relatively quickly, but it did sell at $900,000. And this was a decent property over there, but we've seen a lot of these units over in Tarpon Landings actually sell well over $1 million. And I think the reason that this one didn't reach that mark was because it's only a second floor unit, unit 201 over there. So it doesn't have these huge views that some of these units that have been selling in the mid 1 millions have. So congrats to the buyers and the sellers. $900,000 is a great price for one of those units over there. Again, a lot of them are selling over $1 million. So I think the buyer got a pretty decent deal at $900,000. And that was the highest condo sale of the month. Incidentally, there was only 2 condos that sold last month over $400,000. There was one at like $460,000, and then this one at $900,000. So we didn't have a lot of activity in the higher end condo market this past month. And again, we're going to get into that a little more when we talk about condos later in the video. But let's jump over to, before we do the golf access home, let's look at the highest non-golf access home that sold last month. And incidentally, this one was also in Tarpon Point Marina. It's in the Tarpon Estates segment of that development over there. It was a single family home development. Really nice luxury high-end homes in there. And this one was listed at $1.5 million, $1.499999, $1,499,999. So about $1.5 million. And it sold in the middle of June for $1.3 million. It was a 3-bedroom plus a den, 3 full bathroom home built in 2018, just over 2,700 square feet. It had a beautiful view on that lake right there. But again, it doesn't have golf access. That's just a self-contained lake there. But beautiful views, beautiful outdoor living spaces on this home, and certainly a custom home that sold for $1.3 million. And that was the highest non-golf access home that sold last month. And let's jump over to the highest golf access home. This is always just the highest sale no matter what, because these golf access properties are definitely worth a little bit more money than some of these other categories. But this one is in one of my favorite areas of the Cape, 1506 Hermitage Lane. This is a tiny little gated community right there, actually right between Cape Harbor and Tarpon Point Marina there in the southwest section of Cape Coral. And if you ever get a chance to go into this community, they're just gorgeous homes in there. A lot of them are really large golf access homes. They're custom. They're just full of upgrades and full of high-end finishes, and it makes sense that this one would be the highest sale this past month. This was listed at just under $3 million. $2.998 million is what this was listed for. And it was on the market for almost 6 months, but it finally closed at $2.7 million. A 3-bedroom plus a den, 4-bathroom. Was built in 2002, so it's not terribly new, but again, it's very custom, very high-end finishes, certainly been updated in there. 3,522 square feet, and man, it's just got an incredible outdoor living space, incredible dock space. This is on some really big water, a couple of really cool upgraded boat lifts there, and this is the kind of house that you want if you're somebody that likes to spend a lot of time on the water. So definitely a lot of room for your toys in the Hermitage over at this house. And $2.7 million was a really solid highest sale of the month. So congratulations to the buyers and the sellers on the highest golf access home sale of the entire month of June for all of Cape Coral, Florida. So with these high and low sales out of the way, let's start to dive into these statistics. I always start off with just some broad statistics on the overall market. I'll give you those stats, and then we'll really start to break things down into different categories. So let's get into the overall stats first. Okay, so the broader stats of the entire Cape Coral real estate market. I'm starting to regret sitting in the sun to do this. The lighting certainly was better in here, but you may see me switch back into the shade because it's a little bit of a hot one here on the first week of July. But nevertheless, let's talk about the overall market stats. I always start off with just the number of overall sales that we've had. So again, this is any residential property. We're talking about single family homes, on water, off water. We're talking about golf access homes. We're talking about condos, townhomes, basically anything that's really not a piece of commercial, anything that's a residential piece of real estate, aside from vacant lots and things like that. So here's a look at a little bit over 2-year graph. We had 501 sales last month. As you can tell on this, obviously our main season there is the first and second quarter of the year. We see the majority of our sales activities during those first 6 months of the year, and then things start to kind of drop off and activity goes down as we get into the slower summer months. We don't have the snowbirds down here kids are off school, people are enjoying their time, going on vacation and what have you. So there's just not as much activity, and that's to be expected. So our activity's down at 501. It's still reasonably high compared to the last couple of years, but we're down from May's number 581. It'll continue to slow off as we get into the later summer months, but we kind of peaked out in March of this year. We had 598 sales in the month of March. And if you take this in the broader context of the last 2 years, so far this year in the first 6 months, again, we're talking about January through the end of June, so far we've had 2,905 residential sales in the entire city of Cape Coral. And if you compare that to the last couple of years, last year in 2024, at this point in the first 6 months, we had 3,108 sales. So we are about 6.5% slower in 2025 so far versus 2024. It represents about 203 fewer sales this year compared to last year. But actually, if you look back to 2023, we're not too far off of the pace that we set in 2023. There were only 3,034 residential sales in the first 6 months of 2023. So we're just a little bit over 4% slower than we were back then. So in spite of a lot of negative news and things like that, we are still selling a fair number of properties. We're not quite on pace where we were the last couple of years, but nevertheless, we're still moving through some properties. We're just kind of working through this glut of inventory that I'm going to get to here in just a minute. But 501 was the number of sales last month. Let's look at the median price. So again, this median price includes everything from that $105,000 condo that we looked at all the way up to that $2.7 million beautiful home in the Hermitage. And if you take all of those and line them up, of course, the median is right dead in the center. And the median price last month was $360,500. And that's actually $500 more than the previous month. But when you look at this chart, you can see we're gradually declining, which is, I think, a healthy thing to see in this real estate market. We're not falling off a cliff. We're just kind of gradually correcting, which is the sign of a healthy real estate market, frankly. But $360,500 was last month. So if you go back last year to June of 2024, the median price was $385,000. So the average property is about $24,500 less right now than it was this time last year. It represents about a 6.4% reduction in prices over the course of 12 months. And if you go back a full 24 months, 2 years ago, that median price was above $400,000. It was $402,789. So we are a full, almost a little bit over $42,000 less on average per property than we were 2 years ago. It represents a price reduction, a price correction of about 10.5%. And again, this doesn't take into consideration, our inflation numbers. Generally, real estate outpaces inflation. It's a good hedge against inflation. And so, you consider probably tack on a couple points more than that 10.5% when it comes to the actual correction of this real estate market, just because a dollar is frankly not worth today what it was 2 years ago. But again, it's a gradual reduction, it's a gradual correction, and I think probably, at least for the rest of the year, we'll probably see a little bit more correction. But again, I don't think this is going to be a huge turnaround here. I don't think we're falling off a cliff here. I think we've got a little bit more inventory to get through, and then and things are going to eventually turn around because we still have healthy demand here in the city of Cape Coral for properties. People want to be here. They love the sunshine. They love the waterfront. So let's take a look at the inventory. So this chart I'm about to show you is it's just any properties that had an active status that were on the market at any given point during the month of June. So it doesn't necessarily mean that this many properties are on the market right now, but it means anything that had an active status at some point. So some of these sold, some of them came off the market, some of them expired, things like that. But this is the graph, again, going back to January of 2023. And we're making some significant progress over that inventory spike that we saw. It was kind of unexpected. The December to January inventory spike that we saw in terms of the number of active properties was, at least for me, it was a little bit unexpected. We always see it kind of go up that time of the year, but it kind of shot up really quick, particularly between December and February. And it peaked out at 4,967 properties in February of this year. and we're down to 4,276 in the month of June. So we've taken about 691 properties off the market since that high point in February, and we've reduced inventory by about 14% since February, which we're heading in the right direction. We still got some more work to do on that front, but I think as we get into the further summer months and even into the fall, I think this will continue to go down. It might tick back up as we get into December and January of next year, just because it usually does that anyway. But if we can make some really, really good progress this summer, I think this market will turn around sooner than later. Because again, we do have just quite a bit more inventory than we need to have right now, and that's why it's a really solid buyer's market. So again, 4,276 active properties at some point during the month of January or June. Actually, I took a peek at this morning. We only have 3,398 properties on the market right now. So, take that 4,200 with a grain of salt. Again, that's anything that had an active status. I don't know why they do it like that. Maybe there's no other way to do it, but the MLS system kicks out this data, and this is how they measure it. But if you measure it against last year and the year before, last year at this time in June of 2024, we had 3,984 properties that were active at some point during that month. So we are still about 7.3% higher than we were this time last year. We've made a lot of progress, but we've got a fair amount more to go. And certainly if you look 2 years ago, there were only 3,067 properties in June of 2023. So we're still up just under 39.5% in terms of the inventory over the course of the last 2 years. Represents about 1,209 properties. But the good news is, this past month, for the first time, we tucked back under the high point for last year. The inventory peaked out in April of last year at 4,310. So we've gotten under that number, and now we just need to kind of build on that progress that we've made and get some of this inventory down a little bit further. It's going to be tough to say to know how much of this inventory is going to come back on the market when we get into season in December and January. But hopefully we don't see that big spike like we did last year. Hopefully most of the forced sellers have gotten their properties priced right and either moved on and sold their properties, or have just decided to hold back and sit on those properties for a while longer until they can get those prices that they were wanting for the home. So 3,398 current actives on the market. The days to sell these properties have been going up. Average right now, it's about 56 days on market. So, and usually that involves 1 or 2 price reductions before those things get sold. But typically speaking, once these properties do get priced right, they are moving. It's just taking these sellers a little bit longer to realize that they are not priced right and make those corrections in order to get those sales through. So that's the total market in a snapshot right now. Let's start to break these down into individual categories, and we're going to start off with the biggest category that we have here in the city of Cape Coral, and that's non-waterfront single-family homes. So let's jump right into this as I drag my table back into the shade where it's a little bit cooler. Okay, so maybe a little bit darker, but you're here for the stats and not to look at my dumb looking face. So let's get on with the monthly market report. Again, we're going to talk about off-water single-family homes. This is any single-family home that's not on a body of water. It's very simple. So not Gulf access, not on a freshwater canal or lake or something like that. It makes up the majority of our Cape Coral real estate market. We've got a lot of single-family homes in the city of Cape Coral. So let's jump right into it. And here's the number of sales for this past month. And again, this chart goes back to January of 2023. And we had 318 sales in this category last month. That's down very slightly from May's number of 353. But again, it'll step down as we get into the slower months of the summer and early fall. So we'll continue to see that kind of fall off. It doesn't really indicate anything activity-wise. It usually drops off this time of year anyway, regardless of what the market is doing. But 318 sales. The high point that we hit for this year was 372. That was back in March. But if you take this in the context of the last couple of years, in June of 2024, we did 359 of these sales. So we were 41 sales off the pace of this time last year, this month, June in 2024. And if you go back 2 years ago, it was almost exactly the same. There was 354 sales in the month of June 2023. So we're down a little bit activity-wise. If you take the first 6 months of this year, we've sold 1,812 of these properties. And if you look at the first 6 months of 2024, we had sold 1,982. So we're down, just activity, just raw activity-wise, about 170 properties we've sold fewer this year versus last year in the first 6 months. That represents about an 8.6% reduction in overall activity for this particular category. So we're definitely noticeably not doing as much as we were the last couple of years. Actually, the first 6 months of 2023, it was pretty similar. 1,970 properties were sold in those first 6 months. So we're down, a fair amount. It's about roughly 8.5% in terms of the overall activity. But let's jump over to the median price. Again, this chart goes back to January of 2023. The median price for this category, off-water single-family homes, last month in June 2025 was $340,000. And actually, just like the broader market, this actually stepped up just ever so slightly from May's number. May, the median price for this category was $338,000, so about $2,000 more than last month. But again, this kind of jumps up and down, as you can kind of see on this graph, but the overall trend is a very, very slight gradual decline in pricing. And if you look back 12 months ago in June of 2024, the median price for this category was $370,000. And that represents about a $30,000 difference. And $30,000 is quite a lot when you're talking about numbers that are in the mid-300s. It represents about an 8.1% reduction in overall prices for this category in just the last 12 months. If you go back 2 years ago, you can see that the last 12 months we've had a little bit more of a reduction in prices than the previous 12 months. June of 2023, the median price was $382,500. So we are down about $42,500 from 2 years ago. It represents about an 11.1% reduction from that time. And again, it was up a little bit higher than that because we kind of peaked out for these single-family homes in 2022 before everything kind of got screwy with Hurricane Ian and all that kind of stuff. So down about 11.1% in pricing. Again, that doesn't include inflation, so you can probably add a couple more points on top of that to get a more realistic look at what the correction actually looks like. But let me just touch on a few different categories. A lot of these properties, about 40% of them actually were new construction. So we're still seeing a lot of new construction movement, particularly in this category. This would be maybe considered an entry-level kind of real estate category right here, these off-water single-family homes. And these new construction homes actually were a little bit less than the overall median. The median price for new construction properties was $338,760. I just really think that's because the vast majority of new construction homes that sell do so without pools. So you're getting those values drug up overall because you're seeing a lot of more resales that have pools, and obviously naturally they're going to be a little bit more expensive. And in fact, the homes that sold this past month that did have pools, the median price for those pool homes was $405,000 versus the homes without pools, in which the median price was $318,000. So, give or take, we're roughly $80,000, a little bit over $80,000 more for a home that has a pool versus homes that do not have a pool. But $340,000 was the overall median price for off-water single-family homes. Let's take a look at the inventory. Again, kind of mirrors what we saw in the broader market right here. We had, here's the 2-year graph, 2,348 properties in this category were on the market at some point during the month of January. But again, we're making progress. May's number was 2,458. And actually, this entire chart peaked out in February of this year when there was 2,723 properties on the market at some point during February. So we have made progress. We've taken about 375 properties off the market. That represents just under 14%, about 13.8% reduction in inventory just since February. So that's what, March, April, May, basically 4 months. So we've made a lot of progress thus far, and I fully expect as we get into the later months, even though the sales will go down, we'll see this inventory number continue to tick down. It's just going to be a matter of how much it goes down and how much it's going to come back up. My gut tells me we're not going to have quite that stark, spike in inventory that we saw from December to February this last year. But we'll just have to see, because I don't know how many of these properties are coming off the market with the intention of being placed back on the market when the busier season of the winter and spring happens. So we'll just continue to look at these every month. But again, I fully expect that to go down a little more each month as we get into the later summer and early fall. But take this back 12 months ago, this number was 2,256 properties. So we're still up about 4% from where we were this time last year. So again, we've got more work to do. And if you take it back 2 years ago to the 2023 number for June, there's only 1,826 properties. So I would consider that to be maybe a little bit artificially low inventory still in 2023. So we don't necessarily need to get all the way back to under 2,000 properties on the market, but it sure would be nice to make some more progress on this 2348 that we've got, because over the course of 2 years we're up about 28.6%, about 522 more properties. And again, this chart, this is just any property. These numbers are any property that was on the market at some point during that month. So it doesn't mean that there are 2,348 properties sitting on the market right now. In fact, as of this morning, there's only 1,775 properties sitting on the market as of right now. It's just the way they kind of calculate this metric is a little bit differently, but you can see the overall trends and exactly what's happening. So we'll keep an eye on this, and just like all the other categories, I fully expect the sales to slow down, but I think the inventory is going to continue to be reduced as we get into the later summer months, and we'll just kind of have to see if that's going to go back up and how far it's going to go down later this year, and how far it'll tick back up. It will tick back up a little bit, but hopefully it's not as dramatic as it was this past year. But that's off-water single-family homes. Let's jump over to Gulf Access homes. Everyone loves Gulf Access homes, so let's take a look at what's going on in the Gulf Access home market here in the city of Cape Coral for July 2025. All right, Gulf Access homes, these are obviously the most expensive category that we have here in the city of Cape Coral, and kind of makes sense, but Gulf Access homes, the activity seems to really be significantly more in the first really 3 to 6 months versus the second 6 months in any given year. Obviously, we have more folks here population-wise. Our population is about 30% more in the winter and spring months, but as you can imagine, a lot of the folks that are in this particular market, in the Gulf Access home market, because they are more expensive, a lot of these folks are seasonal residents, or they are retirees with maybe multiple properties where they spend half of the year up north somewhere and then they come down here. So we see a lot more sales for this category in those winter and spring months. But let's dive right into the numbers. Again, this chart is the number of sales that we saw in any given month, and this goes back to January 2023. But we sold 80 properties, 80 Gulf Access homes last month, and that's pretty decent actually compared to the last 2 years. That's been a really decent June. June's been less the last 2 years, and we'll talk about that here in a second. But the previous month in May was actually the high point so far for this year. We sold 102 properties in May of 2025. So it makes sense that we're coming down. As we get into the summer, it'll go down quite a bit even more. We saw these months in the late summer last year and get down into the 40s, 50s, 60s. So it'll continue to kind of drop off. It's just the natural rhythm of how these Gulf Access homes sell in any given year. But taken in the broader context of the first 6 months of the year, we sold, in this first 6 months of 2025, we sold 469 Gulf Access homes so far. And compared to last year in 2024, the first 6 months, we had sold 523. So we are down about 54. We've sold 54 fewer homes this year versus last year. Represents about a 10.3% reduction in overall activity. So it kind of makes sense. We were still rolling pretty good in 2023 and 2024. 2023 was actually a little bit less than 24, 489. So we're really not off very far from the pace that we were setting in 2023, just about 4% less. So we're still selling a fair number of these homes. It's good to see these higher end properties continue to sell in spite of all the negative publicity and things like that. But we are down about 10.3% from the pace that we set last year. So let's jump over to the median price and look at that. And again, this median price, when you look at this graph, it jumps around month to month. When we're talking about in any given month 70 or 80 properties, obviously if you sell a few more of those $2.7 million properties when your sample size is only 80, it'll drag that median price up a fair amount. So that's why you're seeing in this chart that I'm about to show you, you're seeing this kind of jump up and down. But the broader statistical trend is in the softening of prices. And last month, our median price for those 80 Gulf Access homes was $727,500. That was up from May's number. May, the median price was only $685,000. So you kind of have to read between the lines when you're looking at this chart and sort of average all of these out. But when we just look at the raw numbers from June, if you take $727,500 and look back 12 months ago to June of 2024, the median price was $732,000. So we're not too far off of what we put up that month. I still think overall prices are less than it appears on those numbers. That represents only about a 0.6% reduction in the last 12 months. But if you go back 24 months, the median price back in June of 2023 was $784,500. So we're down about $57,000 or 7.3%. Honestly, that kind of undercounts the market, I think, a little bit, or undercounts the broader data on this. I think if you were to take these and sort of average all of these kind of spikes and valleys out and see what the broader trend looks like, I think we're down about 12, maybe even 15% in this category from where we were 2 years ago. And I think 8 or 9% of that was this last 12 months. So I think if you took the same property today versus 12 months ago, that same property, you can expect that thing to be to sell for about 8 or 9% less than it would have sold 12 months ago, and probably closer to 12 or maybe 13, 14, 15% from 2 years ago. And so again, I think this is a healthy correction. We'll probably see a few more points of prices softening. I don't necessarily think that we've got too much farther to fall. I think there is a little bit of correction left to do this, but unless something big or unforeseen, something happens, a black swan event or something like that happens in the broader macro economy, if we go into a recession or something like that for some reason, I think we're just kind of making the correction that we need to make here, because again, prices got a little bit crazy, a little bit hot and heavy after the pandemic, and this is just the natural market cycle of sorting that out. So let's jump over to the inventory. Inventory for Gulf Access homes over the course of the last couple of years, again, it kind of it mirrors that broader trend. We really peaked out on this chart in spring of this year. Instead of February like the other categories, we actually peaked out in April of this year. But we had 896 properties on the market at some point during the month of June. That's down from May's number of 956. And again, that April high point was almost 1,100. It was 1,088. So we've taken 192 properties off the market just in the last, 3 months, right? April, May, June, basically 2 to 3 months. That represents about a 17.6% reduction in overall inventory. Now, I think it's a little more noticeable in this category in terms of some of these seasonal residents in particular taking, if they didn't sell their property during the first 6 months of the year, we see more of them take those properties off the market for the summer months with the intention of putting them back on. So I think a little bit of this reduction in inventory is slightly artificial, and that shadow inventory is going to come back as we get into December and January. It happens that way every year anyway. We saw a pretty big spike this last year, so I'm hopeful and I'm anticipating that we're not going to see quite as big of a spike this next year. I think we've sorted out some of the forced sellers a little more, so we're not going to see that big jump in inventory, hopefully that at least as big as we saw last year. But hopefully we can get a lot more of these properties off the market as we get into the later months of 2025, and that way we've got some room to come up a little bit and it's not going to be that much of an issue. But if you just take these raw numbers, 896 last year in June of 2024, we only had 781 properties on the market in some point during the month of June 2024. So we're still up about 14.7% from where we were 12 months ago. And of course, if you take it back to June of 2023, when it was kind of artificially low inventory, where it was only 570 properties on the market. So that means we've come up about 57.2% just in the last 2 years. But again, that 896 number, that's not properties that are sitting on the market right now. That's just any property that had an active status at some point during the month of June. As of this morning, there were 757 active Gulf access homes on the market anywhere in the city of Cape Coral. So it's a little bit less than that, but the broader trend is, again, these kind of crescendos as in the first 3 to 6 months of the year, comes down for the summer and the fall, and then it kind of gradually picks back up. So hopefully we've seen the worst of it. Hopefully that April is going to be the high point, and as we get into around this time next year, we're going to look back and realize that we didn't hit that high mark in 2026, but we'll just have to keep an eye on it. It remains to be seen how much of this shadow inventory is going to come back on the market once we get to November, December, January. So we'll keep you up to speed on this every single month on this report, but that wraps up Gulf access homes. And let's take a look at condos and townhomes. Condos and townhomes have been just getting really beat up here in the last 12, 18 months, and I'm going to tell you why here in a minute, but let's take a look at those numbers. Okay, condos and townhomes. When I'm talking about condos and townhomes, this is basically anything that's not a single family home and not, a piece of multifamily or something like that. So it's high-rise condos, mid-rise condos, low-rise, coach homes, townhomes, carriage homes, anything like that. So it's not a very big category, so I try to include all those different subcategories into one thing here. So let's take a look at the number of sales. Again, just like Gulf access homes, this category is very much more active in the first 6 months of the year versus the second 6 months, for the same reason that Gulf access properties are, which is, our seasonal residents are more active in this particular category. We have a lot more folks that just have, a winter residence in a condo down here and things like that. So we see more sales in the winter and spring. Number of sales last month, it was just 36. We only sold 36 condos and townhomes last month. And, it's a little bit to be expected. The activity goes down, but our overall condo activity has just been a little bit off the last couple of years. In May, we sold 54, and the highest month of this year so far was in March, and that was 58. And if you look at the highest months of the last 2 years, it was up in the 70s the last 2 years in March, and we only got to 58 this past year. So if you look at the first 6 months of the year for 2025, we sold 273 condos here from January to June. Compare that to last year in the first 6 months of 2024, we had sold 294 condos. So we're about 7.1% less in terms of the activity this year versus last year. And actually 2023, as opposed to all of the other categories, we actually sold more condos in 2023 than we did in 24 and 25. We sold 306 condos in the first 6 months of 2023. And that's incidentally, most of the other categories in the single family homes and things like that, the median price kind of peaked out in that second quarter of 2022 before it started to come back down again. Condos actually peaked out, their median price peaked out in the second quarter of the first or second quarter of 2023. So for whatever reason, we sold a little more higher end condos in 2023 versus 2022 as opposed to some of these other categories. So I think that's pretty interesting. But nevertheless, activity is a little bit down. It's just the nature of kind of what we're going through right now with the increase in a lot of these HOA fees. Bring some affordability issues. Insurance rates have gone up, so HOA fees have gone up. Some of these high rises, the buildings are having to deal with new laws where they have to hold back certain reserves, and they have to keep some funds set to the side for engineering inspections and things like that in the wake of that terrible Surfside, Florida high-rise condo collapse. So fees are up a little bit more, and that's just putting some downward pressure on the activity and on the price as well. So let's take a look at the median price. Again, this is all different types of condos and townhomes, but this is the graph going back to January 2023. The median price this last month was only $222,500. That's down from May's number of $235,250. And again, we don't have a big sample size. We have actually a less of a sample size in this category versus the Gulf Access home. So it makes sense that it bounces up and down quite a bit from month to month. But if you kind of read in between the lines here and average everything out, you can definitely see the trend going in the downward direction. And if you just take that $222,500 median price number from this past month and go back 12 months to June of 2024, that number is $275,000. That's a pretty steep decline in just the last 12 months, $52,500. And when you're talking about low to mid 200s, that represents about a 19.1% reduction in prices just in the last 12 months. If you go back 24 months, we didn't see that huge drop from 2023 to 2024. But the median price back in June of 2023 was $284,500. So we're down $62,000 from 2 years ago, and that represents a 22% decline in pricing. And once again, that doesn't include some inflation years that we've had here. And since real estate really does well against inflation, you can assume that you can probably tack on a couple more points onto that price correction and to get the idea of what the real price correction has been. And so again, I think we're to the point now where there are some really solid opportunities. If you're a buyer, particularly if you're like a young buyer that's wanting to maybe buy your first home or something like that, and you find yourself priced out of some of the single family home markets, you really ought to look at these condos. If you can get these condos for well under $200,000, even if the fees are, you've got to make sure the fees are reasonable. If the fees are $1,000 a month, then that affects affordability. But if you can find something that's under $200,000 and the fees are only $450, $550 a month, and those include a lot of things that you would pay otherwise, like your water and sewer bill, your trash pickup, your structural insurance on the building and things like that, that's not a bad deal. And that's something that really I'm seeing more and more often. Some of these first-time home buyers come into this condo market because you're able to get a really solid deal and at least get some skin in the game and start to see some returns, at least when the equity turns around. And it will. The condo market will turn around just like everything else. There's a demand for properties down here. So we're going to see the condo prices go back up. But nevertheless, I think in the meantime, that represents an opportunity with prices almost 20% lower this year versus last year. We've definitely had at least a 20, even if you kind of average this graph out a little bit, I think at least in the last 2 years, we've had every bit of a 20% correction. So this price correction has been more evident in condos and townhomes versus any other category, and that's why I think there is an opportunity out there for some folks to jump into that condo market. But let's look at the inventory for condos. Again, graph going back to January of 2023, and in June of 25, we had 487 condos on the market at some point during last month. That's down just very slightly from the month before. In May, we only had 496. So what's that? 11? We're down, or 9 actually. We're only 9 fewer properties on the market this past month versus May. But obviously, it peaked out right there in the middle of spring, and March was the high point on this graph, March of 25, and there was about 578 condos on the market at some point during the month of March. So we've made some progress. We've got 91 of these properties off the market. That represents about 16% reduction just since March. And actually, if you take this back 12 months, we're roughly the same as where we were last year. In June of 2024, there were 482 properties on the market. So we only have 5 fewer this past month versus 12 months ago. It's basically a wash. But the broader trend, of course, if you go back 2 years ago, June of 23, there were only 360 of these properties on the market. So we're still up about 35.3% in terms of inventory versus where we were in June of 2023. I don't necessarily think we need to get back to that June of 2023 number. It certainly would be nice. But at the very least, if we could get these numbers under 400, I think we would be in a lot better shape, certainly, because the inventory is still high out there. And of course, the remainder of the year, we're not going to see a lot of sales activities in the condo market. So hopefully some of these overpriced listings just come off the market and we're able to make some more progress on this inventory front. Again, that 487, that's just any condo that was on the market with an active status at some point during the month of June. The actual current actives that are on the market right now as I'm speaking is 416 condos and townhomes on the market in the city of Cape Coral right now. So, you know, I don't know how much more we're going to take off in terms of the inventory later this year. It really just depends on how many of those sellers will just decide to yank their properties off the market, because I don't think we're going to sell a lot, enough to really make a huge dent in this inventory. But if you look at last year, when that inventory kind of spiked up and then went down the rest of the year, August of last year, August of 2024 was the low point for last year. It got all the way down to 427 properties, and then it of course went back up to the 578 that we saw in March of 2025. So I think it would be a really, really great thing if we can get under that 427 by, you know, later this year, hopefully September, October, November. If we can get underneath that 427, I think that will be a good sign for the condo market in terms of showing some signs of finally making that turn and turning around. But in the meantime, I think prices are still going to be a little bit soft for condos, and I think that represents, again, an opportunity for somebody to come out there and pick one of these condos up. We're doing a little bit better job of negotiating these things. The condos are still selling if you price them aggressively, but even the ones that have been out there on the market for a while, you're having to negotiate, because these buyers are kind of in control of this condo market right now. There's not a whole lot of them. So, you know, these sellers really have to kind of acquiesce to what these buyers are bringing to the table. So that's the story for condos and townhomes. Let's talk about vacant lots, and specifically residential vacant lots. And we're going to talk about off-water lots, because I'll briefly mention the waterfront, but we'll get into that. All right, vacant residential lots. Again, this is the entire city of Cape Coral, and we're mainly going to focus, these charts are going to focus on non-waterfront lots. We only have a handful of waterfront lots that are selling in any given month right now, so there's not really a whole lot of statistical information to glean off of those sales. I'll briefly mention some hard numbers for you, but the charts are going to focus on the off-water, mainly single-family lots. That's what these numbers represent. So, chart for the number of sales. Take a look at this trend over the course of the last 2 years. The trend in overall activity has been going down. I think that has 100% to do with the builders not buying as many lots as they were a couple of years ago. It doesn't make as much sense for these home builders to be building homes right now. The number of resales that we have on the market right now are such that the resale prices are much more attractive than what a lot of these builders are able to sell these new construction homes for. And so as a result, the production builders like the D.R. Hortons and the Lennars and things like that, they're not building nearly as many homes as they were 2 years ago. And as a result, they're not buying up as many of these vacant off-water lots. But the number of sales last month was only 71 lots in the entire city of Cape Coral that sold. That's down from 92 the previous month. 92 was kind of an errant month. It kind of spiked up there in May, and it otherwise had been down in the 70s the previous few months before that. But obviously the overall trend is in a downward direction. If we go back 12 months ago to June of 24, we had sold 87 lots that month. And of June of 2023, when those builders were still buying a lot of these lots, sold 158 lots. So it's a little bit more difficult to sell lots these days. Again, there's not a whole lot of lot buyers out there, and the ones that are you know, kind of few and far between. The few of the production builders, Adams Homes. I know I put one under contract this last month with Adams Homes, which is another production builder here around. So they are still buying lots up. They're just not buying as nearly as many as they had been a couple of years ago. So 71 total lot sales last month, and the vast, vast majority, as I always mention every month, of these sales were north of Pine Island Road. It's just the mere fact that there are more vacant lots available north of Pine Island Road. That area is still where well and septic homes are. And and as a result, just the building hasn't filled in those empty areas as much yet. So naturally, there are going to be more sales up there, and they're going to be a lower dollar amount. In fact, there was only 18 sales south of Pine Island Road. So of those 71, only 18 of them were south of Pine Island Road. The remaining 53 were north of Pine Island Road, and that's why we see this median price figure. The northern parts of the city are really going to drive that median price more than the southern parts of the city. And actually last month, it's weird to look at this chart when we've got activity dropping as we did over the course of the last 2 years. This is the median price chart since January of 2023. We've actually gone up just a little bit for vacant lots in spite of the activity going down. Median price for lots, off-water lots in the entire city of Cape Coral last month was $46,000. If you look back 12 months ago, it was $48,000, and that was kind of a high month back in June of 2024. It's been largely flat since in the last 12 months, but if you go back to 2023, the median price was $41,000. So we're up about $5,000, which when you're talking about $46,000 is not insignificant. We're up about $5,000 per lot on average, or at least the median price. Again, if you're looking north of Pine Island Road, that's where the majority of those 71 sales happened. And if you just look at those areas, the median price in those areas is about $44,500. Because if you get down south of Pine Island Road, again, all of those properties are on central water and sewer, and they're over double. The median price for those 18 sales that we saw south of Pine Island Road for off-water vacant residential lots was $94,500. So literally over double the cost of the well and septic lots up in the northwest and the northeast. So we'll continue to pay attention to that. I think that has entirely to do with the fact that we don't have a lot of forced sellers in the lot market right now. There's not a lot of people out there just kind of losing money every month by sitting on lots. These people own these lots for cash. Some of them have owned these lots for maybe 40 years. They've maybe been in the family since the 60s or 70s or 80s. So, there's not a whole lot of folks out there that are really hurting so bad that they're willing to take big discounts on their lots. So they're sitting on the market for a year or maybe more, maybe 2 years. And they're finally getting their number. And it's been pretty consistent over the last 2 years. So we'll see if that keeps up. But let's look at the lot inventory, because lot inventory is kind of the inverse of what all of the rest of the residential real estate market looks like. Again, these are number of lots that were on the market at any given time during that each month. So June's number of 2025, there was 1,252 off-water residential lots on the market at some point. That's basically exactly where it was the month before. In May, it was 1,248. It kind of undulates a little bit with the season, as you kind of tell here, but the big reduction happened from 2023 to 2024. Last year at this time in 2024, June, there was 1,151 properties. So we're up about 8.8% in terms of the inventory, but if you're noticing this kind of undulation, I think it's going to go back down a little bit as we get into the later months of 2025. The bigger story is June of 2023, there were 1,546 lots on the market. So we've come down in inventory about 19% since 2 years ago. So again, these are just properties that were on the market and had an active status at any given point during those months. The current actives right now for off-water vacant residential lots was 924. So a little bit less than these numbers on these charts, but nevertheless, that's the story with the inventory for off-water residential lots. If you want to talk about Gulf access lots, there were only 12 Gulf access vacant residential lot sales last month, and the median price for those 12 was about $277,500. So there's not a whole lot of statistical data to glean off of these Gulf access lot sales when you're only talking about 12 lots. There could be a few more that sold in maybe the Northwest and maybe that didn't have seawalls and they're selling for under $200,000 versus maybe a few more sales in the next month in the Southwest that did have seawalls and they're up in the high 200s or low 300s or even north of that, north of $400,000 in some areas. So 12 Gulf access lot sales, right in the middle is about $277,500. So if that gives you any indication of what the Gulf access vacant residential lot market looks like. But that wraps it up for lots, and we're going to go ahead and get into advice if you're maybe a buyer in the Cape Coral real estate market, and then shoot over and give you some advice if maybe you're a seller in a tougher real estate market here in the city of Cape Coral. So let's jump right into that. All right, so if you're a buyer in the Cape Coral real estate market, what is my advice to you right now in July of 2025? What do you need to be thinking about? Well, it continues to be a really solid buyer's market. It has been for the last, well, really 18 months or so, and prices have definitely come down about 10 to 12% over the course of the last 2 years. So buyers are getting really, really good deals out there. We did see inventory kind of peak out in February or March, and the number of available properties has started to come down a fair amount, in some cases 14 or 15%. But that still remains a lot of inventory out there on the market, so you have a really good selection of properties. There's still plenty of overpriced properties, so you need to kind of focus on the ones that are a little more serious about it. We still have a lot of unrealistic sellers in the market that just have their properties priced way too high, and I guarantee they're not getting any activity on it, and apparently they just don't care. So those sellers are kind of irrelevant. You need to focus on the properties that have exhibited traits of a realistic seller that wants to sell in this current market. So, I would, if you can, try to pick 2 or 3 homes out that you're looking for. I like to do this when I'm representing buyers. We find 2 or 3 properties that we really like that would be happy moving forward with, and try to pit those sellers off of one another as we're negotiating to try to get those sellers to compete for us as buyers, and that way you can get the best price and best terms for that property. So you're definitely in control as a buyer right now. It's not going to last forever. And one thing I really should drive home, and I really try to drive this home with my buyers right now, is don't base the feeling of whether or not you're getting a good deal or not based on the discount you're able to get off of the list price. Getting discounts off the list prices are great, but if that property's overpriced by $50,000 and you get $40,000 off the list price, you're not getting a good deal. You're overpaying $10,000 for that property. So you really need to just look at the market numbers and decide whether or not that property at that price is a good deal or not. And in fact, we got into situations recently where I've had buyers get into multiple offers and have to compete and actually drive up their offer amount and their terms in order to compete with that. So these properties are selling relatively close to list price once they get priced right. In fact, the average right now in Cape Coral is about 97.5% list price to sale price. So now it's taking those sellers, usually 2 or 3 price reductions in order to get to that number to where it does move close to the list price. But once those properties are priced right, there are buyers out there for it. So, pay attention to what the market numbers look like and not necessarily the amount of a discount that you're getting off of the list price. If the property is priced really, really well and you pay 100% of list price, you're still getting a really good deal out there. So enjoy this while it lasts. I had some really good advice given to me early on in my career. And, a mentor of mine told me, Dustin, don't really try so hard to time the bottom of the market, especially for properties that you're using for personal reasons. The long-term upside of this area in Southwest Florida is great. So you're going to gain equity in the long term, especially if you hold on to that property for 5, 10, 15 years. And so if you try to screw around and wait to try to time that market correctly, you're almost always going to miss that window of opportunity. So if you are in the market right now, again, especially if you're using this for personal reasons, if you're going to actively use this property either as a seasonal residence or as a primary residence, you're not going to be in bad shape if you buy on the way down and maybe miss 2 or 3 percentage points of swing in prices, because in the long term those prices are going to be just fine, and in the meantime you get all of those lovely memories and usage out of the property. So if you wait a year and you gain another 2 or 3 percentage points on the discount on purchase price, you've lost that year of usage. So don't necessarily try to time the bottom of the market. I think that's an important and useful piece of information. But as a buyer, enjoy this while it lasts. It will turn around eventually. I think we've got at least the rest of the year as a buyer's market until this inventory really comes down a bit farther and those interest rates get down and that demand kind of comes up. But overall, we're still in a pretty healthy buyer's market right now, and take advantage of it while you can. And that's just my basic advice for buyers right now. Enjoy this time. It'll last for a little bit, and then it'll be on to the seller's turn to have this market for a while. All right, so if you're a seller in the Cape Coral real estate market, what is my advice to you right now, and what do you need to be paying attention to as we get into the later months of 2025 right now? Well, it's still very much a buyer's market. The buyers are very much in charge of this real estate market. There are still plenty of buyers out there. We're not seeing a huge reduction in demand. We just have way too many properties on the market, and most of those properties, frankly, are still overpriced. One thing that I will say is when you do get that property priced right, it's selling for relatively close to the list price. And on average right now, if you take up all of the sales that happened in the last month, the average property sold for almost 97.7% of the list price. So once these properties are priced right, they're selling fairly close to list price. We're not seeing all these huge discounts off the list price. There are some out there, certainly. But once these sellers kind of get it in their head where they need to be price-wise, they generally sell fairly quickly, and they sell it for fairly close to list price. So if you're sitting on the market, you're not getting any activity, and it's been 2, 3, 4 weeks, and you're not having buyers come through that property, chances are you're overpriced. So you need to get a lot more aggressive on your price. We probably have maybe 2 or 3 percentage points to go before this market kind of bottoms out and turns around. So you need to get out in front of that. If you look at the sales within the last 60 days and it's, the price is X, you need to maybe go X minus 1% or something like that to try to get out ahead of this. Because if you try to follow the market down, if you price too high and follow the market down, you're inevitably going to sell that property for less than you otherwise would have had you priced it correctly out of the gate. So price is the predominant thing driving this market right now, and it's a foregone conclusion that your property has to look tip-top. There's just so many out there. Buyers have ADD right now because they're getting hit with every direction from all these properties, and they're going and seeing 20, 30, 40 homes before they decide to purchase on something. So your property has to look top-notch. It has to look better, smell better, all of that stuff. The experience of being there has to be better than all those other properties out there on the market. And then once you have that, then you need to get it priced right as well. And that's really the secret to success right now of getting these properties moved, is it has to look great, especially within that first 5 seconds of walking through. The drive up to the house has to look great, the curb appeal has to look great, and then that first 5 seconds of walking in the front door has to look great and smell great, because those buyers oftentimes are going to decide within that first 5 seconds of being in that property whether or not they have a positive or negative view of your home. So make sure it's looking top notch, and then get it priced right. If you need some help on what that price needs to look like, reach out to me. I'd be happy to help you out. My contact information is right there on the screen. I've had to turn down some listings here. I don't like turning down listings, certainly, but I'm not a magician. I can't sell these things for more than they're worth right now. So if you have an unrealistic view of what that property's worth in this current market, you're not going to have any success in getting that property moved. So if you need some advice, I would love to hear about your property. I'll tell you exactly what we need to be ballpark-wise to get that property moved, and we'll get it moved, because I am still selling plenty of listings. We're just having to get a lot more aggressive on the price, and we're having to do a couple of creative things to maybe find those buyers out there and set ourselves apart from the remaining inventory. So good news is, long term, we're going to be just fine. Southwest Florida, everybody loves the sunshine and the waterfront. Everybody loves the great weather down here. There's still going to be plenty of demand down here. But we're in this cyclical change right now, and it's a buyer's market. Eventually it will turn around. I think it'll turn around sooner than later. So if you're able to hold on, if you don't have to sell right now, pull your property off the market. Let's just sit tight for a while. If you got another year and a half, 2 years to sit on this property, I think this market will turn back around again, and then we'll start to see some price gains. So that's my advice for sellers as it pertains to Cape Coral, Florida in this July 2025 real estate market. It's a tough market for sellers, but if you can hang on, things will turn around sooner than later. All right, so let's wrap things up with a summary of the Cape Coral real estate market, and particularly I want to kind of reference the Wall Street Journal article. If you haven't seen this Wall Street Journal article, about a week ago, the Wall Street Journal put out an article where almost gleefully they proclaimed Cape Coral is the worst housing market in America. And what they were basing that statement off of is the fact that our prices have softened about 11% in the last 2 years. Now, an 11% reduction in prices over the course of 2 years, to me, isn't that catastrophic. It certainly isn't something to write home about. I think that's a normal market correction, particularly in the broader context of what we went through here as a market since 2020 and the pandemic. You know, we had this ramp up where we had a significantly, almost artificially low amount of inventory and a really super high demand that drove those prices up coming out of the pandemic. And, you know, that necessarily had to cool off. You can't just have consistent price growth like that and sustain that. Eventually, nobody's going to be able to afford a house. So it had to cool off. It needed to correct and kind of reset itself. But if you look at this market in the broader context of what's been going on, you know, the median price, as we just looked at here this past month, is around $360,000. If you go back just a few years to June of 2021, the median price was $330,000. So as a seller in this Cape Coral real estate market, particularly if you've owned your property for more than 3 or 4 or 5 years, you're still doing very, very well when it comes to the value of your property. The property is definitely worth more than it was in 2021. So for a market that's supposedly the worst in the United States, for somebody that's owned a property for more than 4 or 5 years to have a significant amount of equity, I still think that we're doing pretty well as a real estate market here. And I'm happy to see this correction, because that means we're getting back to a more normal real estate market, a little bit more equilibrium. You know, they say that the months of inventory of a normal balanced market is about 4 to 6 months. And right now we're sitting at just a little bit north of 7, which puts us on the buyer's market side of things, which we clearly know that we are. But it's not like we're sitting on 8, 9, 10 months of inventory right now and everything, the bottom is falling out of everything. This is a normal market reset, and barring some unforeseen black swan economic event where we dive into a major recession or something like that, I don't see this significant, you know, decrease in prices further than what we've seen gradually over the course of the last 2 years. So, you know, take a lot of this clickbait with a grain of salt, and whether it's with mainstream outlets like the Wall Street Journal, or whether it's just you know, a few of these select YouTube channels, national YouTube channels that like to just drop video after video of the sky is falling. I think when you really drill down and look at this data, we're undergoing a normal, healthy market correction. And you know, another thing that I just wanted to mention, if the market was really so terrible and we were such a distressed market, we would see a lot more distressed sales, and we're not seeing distressed sales hardly at all. In fact, I just pulled the statistics this morning. You know, we sold a little over 5,000 properties this past year in Cape Coral. A little bit over 5,000 properties transferred, residential properties transferred in the last 12 months, basically. And of those, there was only 31 foreclosure sales. That's like 0.6%. That's back, like, I think it's 1 out of every 126 properties that transferred were actually foreclosures, were bank-owned properties. So to me, especially having gone through the 2008 financial crisis and saw exactly what went down both before that and after that. I mean, my team and I sold over 1,000 foreclosures for various banks. We were the main sales staff for Suncoast Credit Union, which is a local, kind of a regional, statewide credit union around here for the southern half of the state. So we sold our fair share of foreclosures. There's not foreclosures out. I think I've had 4 properties that I've sold, 4 foreclosure properties that I've sold in the last 18 or 24 months. That's it. And we were doing 30 per month back in 2010 at the height of that foreclosure crisis. So we're not there. You know, we probably do have a couple more points of correction to go, but as long as we maintain this kind of gradual correction, this is a normal, healthy market cycle, and we're going to come out on the other end of this, and we'll see some positive growth once we kind of get back to a little bit more equilibrium. But there's still plenty of people that want to be here. If you are a seller and you're able to kind of hold on and step back, and you don't have to sell right now, I think you're going to be looking really, really good here in another couple, 2-3 years. And you know, if you do have to sell right now, just especially if you've owned your property for more than a few years, just take solace in the fact that your property is worth a heck of a lot more than it was 4 and 5 years ago in 2020, 2019 certainly. So we've had a good run, and it's time to correct a little bit and settle things down. But we're still selling a lot of properties, and even if we do have to experience 2, 3, 4, 5% more reduction in prices, in the long-term grand scheme of things, we're still in a really, really good spot. So if you are in this real estate market as a buyer or seller, I hope you'll reach out to me. I would love to hear from you, and I'd love to talk to you about your individual situation and tell you how my team and I can help you out. So certainly my contact information is right there on the screen, but beyond that, just thank you so much for being here. I know these are really long videos, and I value your time. Hopefully you were able to kind of jump around with the chapters down there and find the statistical data that you were looking for. But thanks so much for being here. Make sure you're subscribed so you can be around for these videos, not only these every month, but the weekly videos as well, because again, I'm trying to just really give you a lot of useful, great information if you are somebody that's interested in Southwest Florida and the real estate around here. So thanks again for being here, and I'll see you in the next video here in just a few days.
Like and subscribe. Just kidding.